Let's kick things off with a simple question, a little thought experiment that could honestly change everything. What if? What if, instead of spending $1,000, you decided to invest it? It sounds small, but the ripple effects can be huge. Okay, let's really get into this.
So, let's make this real. Imagine it. A fresh $1,000 lands in your account. The year's just getting started. You can spend it right now, or you can put it to work. What's the move? What's your decision?
This choice isn't really just about the money. It's about two totally different mindsets. On one side, you've got that instant hit, that immediate gratification you get from buying something new. And on the other side, you have the potential for a much bigger reward down the road. It's the classic battle, right? Satisfy your wants today or build your wealth for tomorrow. Okay, so to see how this could actually play out, we're going to run a little simulation. Let's pretend it's 2025. We're taking that $1,000 and sending it down three very different roads, using some really common examples from each world: metals, crypto, and stocks. Let's see which path leads where.
First stop on our journey, path number 1, metals. Now, this is your classic safe haven play. We're talking about the big three: gold, silver, and platinum. For centuries, this is where people have put their money to protect its value when things get a little shaky. And whoa, check out these results. This is pretty fascinating. At the end of our hypothetical year, that $1,000 in gold, it grew to $1,630. Hey, not bad at all. But look over at silver. It absolutely skyrocketed to almost $2,500. Silver was, by far, the surprise winner here. I mean, let's just put a number on that for a second. That's a 149% return in a single year. It's an amazing illustration of how even these so-called safe assets can sometimes deliver some absolutely wild growth. But what if you didn't want the stress of trying to pick the one big winner? Well, if you had diversified, just split your money evenly across all three to spread out the risk, you'd still be looking at a fantastic 113% return. It really proves that not putting all your eggs in one basket is a super smart and way less stressful way to play it. All right, time to switch gears completely. Let's talk about our second path, crypto. We're leaving the calm waters of the safe haven and diving headfirst into the wild, high-risk, high-reward world of digital currencies. So, yeah, you might want to buckle up for this one. And this chart, wow, it tells the whole story, doesn't it? It was absolute chaos. You see these little slivers of green, right? Like BNB, which had a nice little gain. But they're just completely swamped by a sea of red from some major losses. Just look at that huge chunk that Dogecoin took out. The difference here is just mind-blowing. Your best performer, BNB, netted you a 22% gain. But the worst one, Dogecoin, it wiped out 64% of your cash. That is the very definition of extreme risk and volatility. So, did our diversification strategy save us here? Nope. Even if you tried to play it smart and spread your $1,000 across all these different coins, you still would have ended the year down 15%. It's a pretty stark reminder of the kind of risk you're taking on. Okay, on to our third and final path, stocks. This is often seen as that just right middle ground. You're investing in some of the world's biggest, most familiar companies, looking for more balanced, steady growth. And the results here were really solid, pretty much across the board. The big tech names you know and love really delivered. NVIDIA and Tesla both saw some really nice gains, but the undisputed champion here was Alphabet, Google's parent company, with a huge 65% gain. So what does that actually look like in your account? Well, your initial $1,000 investment in Alphabet stock would have turned into $1,652 by the end of the year. That's some serious growth from just one smart decision. And what if you diversified here? Once again, it proves its worth. A portfolio spread across all of these major stocks still grew by a very healthy, very steady 23%. This is what balanced, profitable growth looks like, without all the heart-stopping drops we saw in the crypto world. So we've looked at the numbers from all three paths, but you know what? The most important takeaway here isn't about whether metals, crypto, or stocks was the winner. The real game-changing choice isn't which asset you pick, it's the choice to invest in the first place. Now, this all sounds great in theory, but it brings up the $1,000,000 or $1,000 question. Where on earth are you supposed to find an extra $1,000? I mean, most of us don't have that just sitting around. Well, the thing is, that money is often hiding in plain sight. It's disguised as these little everyday expenses that we don't even think twice about. It's that brand new phone upgrade that feels essential, but maybe isn't. It's the cost of a daily habit that adds up to a shocking amount over a year. It's all those forgotten subscriptions just quietly draining your bank account every single month.
Let's use a perfect, really powerful example: the iPhone dilemma. You could take that $1,000 and buy the latest phone. It's an asset that starts losing value the literal second you take it out of the box. Or you could have taken that exact same money, invested it in our top stock, Alphabet, and turned it into over $1,600. Same money, two completely different worlds. One choice burns value, the other one builds it.
And that really brings us to the most important point of all. Making one small, conscious decision with just $1,000 might actually shift your entire mindset about money more than getting a raise ever could. It stops being about how much you earn and starts being about the power you have with the choices you make. It's about building for your future, one decision at a time. So what small decision could you make today?